Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Qingyi. Good evening. Today is Monday, March 9th. I'm analyst Zhang Jida. During class, please remember to like, subscribe, and share for us. If you have any investment questions, feel free to leave me a comment. If I don't have time to answer today, I'll get back to you in tomorrow's class. I want to remind everyone that starting this week, the US stock market has entered daylight saving time, so our group program will air earlier at 8 p.m. The show will still last for 1 hour and then end. So even though some students have asked me if this means we get off work earlier, the answer is no, because I also have to start work earlier. So just a reminder, the Qingyi evening program now starts at 8 o'clock sharp. Another thing is, as you all know, the international stock markets have been in turmoil lately, with prices dropping dramatically. Last Friday, if you have time, you can check it out. I recorded a short 3-minute video for the Qingyi Weekend Report. In that video, I briefly talked about what 2 things you need to pay attention to when facing negative news in the international stock markets during the second quarter. If you keep these 2 things in mind during the second quarter, then basically you shouldn't run into any major issues with the market. So if you have time, go check it out. There's a 3-minute segment from the Weekend Heroes Report, which I happened to record last Friday, so if you have time, go check it out. But if you don't get a chance to watch it, that's okay too. Anyway, in today's show with the group, we'll be analyzing everything for you, taking a deep dive into what happened over the past week and how to look at the coming week, especially since there are a lot of economic data releases this week. We'll be tying in both international and domestic events. There's a whole bunch of things to share with everyone. Good evening, everyone. Hello to all of you. I see that Mi Daizi, Brother Yulin, and also Flying Fish and Alice Fu have just joined. Good evening to you all. Also, just to let everyone know, some students recently asked if there would be any seminars coming up. The next seminar I have scheduled is next Monday, March 16th. I'll be giving a talk at the Kaohsiung branch office in Kaohsiung. So this will be in the afternoon. For more details, you can ask our contact at the Kaohsiung branch office in Kaohsiung. Just inquire about the U.S. Stock Investment Seminar happening next Monday, March 16th. All right, hello everyone, and who is this? Is this Guy, or what date is it? Hello, good evening to you. All right, okay, then let's get started with today's investment highlights. First up, the US and Iran are on the brink of conflict, and there are 3 conditions for bottom fishing. So regarding the US and Iran, the situation on the battlefield is really heating up. What kind of developments are happening now between the 2 sides? Is there any chance for peace talks? Actually, it's not so much about having a chance, but rather about certain conditions being met. So today, I'll be sharing with everyone exactly under what conditions the US-Iran conflict might become less intense. Also, a lot of you have been asking about the 3 bottom fishing conditions. Basically, with the recent significant corrections in the Taiwan stock market, US stocks, and global markets, is now a good time to jump in? Whether it's making aggressive short-term moves or trying to catch the bottom, today I'll go over 3 simple bottom fishing conditions with you. If you meet even one of these 3 bottom fishing conditions, then we can look further into it. Finding the right buying point is enough. So what are these 3 conditions? Tonight's show will focus on observing them closely. Now, in the industry, will Oracle drop the ball? In the whole AI perpetual motion machine, Oracle plays a very important role. Previously, for example, NVIDIA invested in OpenAI. OpenAI then partnered with Oracle, and Oracle in turn bought related chips from NVIDIA. In this whole chain of the AI perpetual motion machine, every player is extremely important. You can't afford to lose even one. But today, there are reports that Oracle might, give up on its expansion cooperation plan with OpenAI at the Texas plant? Given the situation, what kind of role does NVIDIA play? Whether this dropped link can be reconnected is extremely important. Another key piece of industry news, continuing from last week to now, maybe last week, with the US-Iran conflict, everyone seemed to overlook the financial sector's economic data. What happened was the issue with credit cockroaches. Since last week, after the bankruptcy of the UK's NFS credit institution, we've actually seen a lot of other small companies facing their own financial crises. We must see if these credit cockroaches are isolated or systemic, as this will impact the Q2 market. I'll also outline related risks to watch. Now, let's review the fun data together. As for the US data from February, last week's non-farm payroll and unemployment rate numbers came out, and the results were quite, well, especially the non-farm payroll data, which was much lower than expected. The previous figure was 126,000, the forecast was 59,000, but when it was announced last Friday night, it actually showed a decrease of 92,000. This indicates that the overall job market is relatively weak. As for the unemployment rate, it jumped from 4.3% to 4.4%. Although the increase in the unemployment rate wasn't that big, the overall number of non-farm jobs dropped significantly. So under these circumstances, the market originally expected that the job market would be relatively weak, which would favor the Fed in making a rate cut. Logically, when the job market is weak, it should be beneficial for the Federal Reserve to cut interest rates. However, this factor that favors the Fed rate cut was disrupted by something else, the ongoing conflict between the US and Iran. This is one of the main disruptions, especially with oil prices surging, so we'll take a closer look at that in a moment. Also, there's a data release tonight at 11 o'clock, but it's not that important. The previous value for the New York Fed's one-year inflation expectations in February was 3.09. As for this data, you can just take a look at it around 11 p.m. if you have time. It doesn't really have much impact on the market. Right now, the entire market's focus is on what I just mentioned first, whether oil prices can actually be controlled, and whether the negotiations between the US and Iran can help ease tensions. Another thing is the issue of credit, financial credit. You need to keep this in mind because it's a potential influencing factor, okay? Now, as for the officials' remarks, well, when those officials talk, for example, Daly mentioned something. Daly said regarding the non-farm payroll numbers, right? You shouldn't ignore them, don't overlook them, but at the same time, don't overinterpret them either. Then, in terms of the positions of the Harker funds, Harker said that interest rates might remain unchanged for quite a long time, and as for the US dollar, its dominant position globally is hard to shake. To put it simply, you can see that Daly said the non-farm payroll numbers shouldn't be ignored because we just saw that the non-farm numbers were much lower than expected, right? With the non-farm payroll numbers dropping, logically, a decrease in non-farm jobs would mean the market is weaker, so there should be a rate cut. But why did Daly and Harker choose this moment to tell everyone that rates will stay the same, and even say there's no need to overinterpret it? Why? Because this is right before the mid-March to March 18th or 19th FOMC meeting on the interest rate decision, so it's coming up soon. Probably next week we'll be facing the latest one of these meetings. The interest rate decision will probably be to keep rates unchanged because based on what they said, it seems like the job market isn't their main concern right now. What they're really worried about is whether inflation will spike due to the ongoing war, which could prevent the Fed from using rate cuts to stimulate the economy. Okay, now as for Ms. Mester, she only mentioned that the current neutral interest rate should be between 2.5 and 2.75. What does that mean? She means that the so-called neutral rate is basically the level of interest rates that, if it falls between 2.5 and 2.9, it won't cause the economy to overheat or slow down too much. That's what's called the neutral rate. So what Ms. Mester is saying is that if the neutral rate is between 2.5 and 2.75, and considering the current Fed rate is between 3.5 and 3.75, she thinks 2.5 is still not a big problem. In other words, the range from 3.5 down to 2.5 means that even if rates are cut from 3.5% to 2.5%, she feels it wouldn't be particularly good or bad for the economy. It would still be within a manageable range. In other words, what he means is that he supports a 0.4% rate cut, so he's still maintaining a relatively dovish stance as a committee member. So overall, whether it's Bailey, Barkin, or Mester, the doves remain dovish, the hawks or centrists remain unchanged. So even though the job market was weak in March, nothing has really shifted. But before the war situation is completely settled, or before all the uncertainties are clarified, I think it's very likely that rates will remain unchanged in March. That's the big picture. Oh, Holly, good evening. Good evening. As Han Williams said, war really burns through money. Every time. It just leaves us broke. Haha, actually. US and Taiwan stock markets are both running out of money. Such sudden waves hurt many who can't react in time. War is expensive. Reports show the first 100 hours of a US-Iran conflict cost the most due to massive ammunition and troop mobilization. It cost over 10 billion NT dollars, showing that war is extremely expensive. They say an aircraft carrier burns through 100 million NT dollars daily or hourly, I can't remember which, but either way, it costs a ton of money. All right, Anna won, it's late. Anna, good night. Okay, let's keep going. Besides this closed-door discussion, anyway, like we said, everyone in the UK is doing their own thing. There's also the fact that the interest rate from March hasn't changed. We can also see that the yield on the 10-year government bond has shot up again, reaching 4.19%. The reason is pretty simple. First, the committee members are taking a wait-and-see approach and are keeping the interest rate unchanged. The second big reason why the yield has jumped to 4.19% is mainly because oil prices have surged and the war is ongoing. People are worried that with oil prices spiking, inflation will be hard to bring down. If inflation doesn't drop, like with crude oil prices, food prices, and everything else going up, then, of course, the Federal Reserve won't have any reason to cut interest rates. On the contrary, they might even have to raise rates or at least keep them unchanged to curb excessive inflation. So, as we can see, with the war at a stalemate, the yield has reached 4.2%. And then the terminal rate also shot up to 3.27%. Naturally, the number of expected rate cuts by the end of the year has dropped to about 1.4 times. I remember that in our Good Night live stream 2 weeks ago, the expected number of rate cuts was around 2.2 times, and that was just a week ago. As soon as the war broke out, around February 28th, I think, back in our live stream 2 weeks ago, we were still watching the situation, and the US was saying there might be some negotiations with Iran on March 2nd, right? At that time, Iran was even saying that there had been some positive progress in the talks. But who would have thought on the 26th or 27th, we were still saying we expected negotiations on March 2nd, and then on the 28th, missiles were already landing right at Iran's doorstep. They even targeted their supreme leader, Khamenei, or sometimes it's translated as Khamenei or Khamenei. Well, the translation varies. They launched a decapitation strike. Rate cut expectations fell to 1.4 and yields spiked. All war consequences. This has an impact. Plus, Trump's son buying oil stocks a few days ago, it's possible, since they have vast information and resources, insider info like this is plausible. Just like William said, it's really impossible to guard against this kind of thing. Of course, only those with both power and money could pull off something like this. That's the unique advantage politicians have. That's basically how it is. As for the US dollar, its price has gone up slightly by 0.49%. This is mainly because, at first, there was a short-term demand for safe haven assets, which increased the demand for the dollar. That's why it's staying above the 200-day moving average. If, going forward, the conflict between the US and Iran starts to show some signs of hope, we'll keep tracking it for everyone. If there are signs of hope, then we might see the demand for the dollar, well, its demand would decrease again, and of course, oil prices would drop back down as well. Speaking of the potential decrease in demand for the US dollar, well, 2 weeks ago, there was basically nothing happening on the Western Front. Ukraine and Russia weren't doing much, and the US and Iran were still in negotiations 2 weeks ago, and at that time, I figured not much would change and geopolitical risks were low. On March 2nd, negotiation results were still pending. I shared this last week, so enjoy this beautiful spring. Even though the US and Taiwan stock markets. Despite the constant news and noise, aside from watching the markets, take a walk and enjoy the spring weather. Remember, I put cherry blossoms on the first slide for a reason. This cover photo isn't just a random internet screenshot. This cherry blossom photo isn't a screenshot, it's one I took myself just last week when I happened to visit Taipei. If you live in the north, you might know there's a forest recreation area at Laleshan in Fuxing Township, Taiwan. Every year, around late February to March, the whole mountain is covered in blooming cherry blossoms. Yoshino cherries, Showa cherries, you name it, all kinds of cherry blossoms, including the native mountain cherry. So this photo was actually taken just a couple of days ago. From March 6th to 8th, I visited Laleshan for the cherry blossoms. Since the mountain is high, they were in full bloom. While lower areas have withered, Laleshan's blossoms are still going strong. It's absolutely beautiful. So if you have the chance, if you're from the northern region, you might want to take advantage of the weekend. There's still a chance to see cherry blossoms up at Laleshan. As for whether there are cherry blossoms in central or southern Taiwan, I'm not too sure. I've heard that if you want to see them in the central or southern areas, you'd have to go to even higher elevations, since it's warmer down south. For example, Alishan, there are cherry blossoms in full bloom there, probably because the altitude is higher and the temperature is still relatively low, so the cherry blossoms haven't all fallen yet. So if you have some free time on the weekend, why not go out for a walk? Just go out and enjoy it. After all, that's how things are right now. Just because the market is like this doesn't mean you should ignore it. It's just that sometimes there are factors in the market that are beyond our control. Some things we can manage by looking at fundamentals, analyzing the chips, or using technical analysis to adjust our buy and sell prices or to manage our positions. But the factors we're facing in the short term are all external and out of our control, and a lot of them are sudden events. For example, when the US attacked Iran and killed their top leader, this kind of thing isn't something we can predict just by looking at fundamentals or technical analysis. It's really difficult to foresee. Since it's so hard to predict, let's look at it another way. Even though these events are difficult and they impact the market, if we change our perspective, every time there's a drop caused by these non-economic factors, every time the market falls because of something that's not economic, this isn't a credit, financial, or internet bubble crisis. It's war driven by non-economic factors. Usually when the index falls for these reasons, how does it drop and eventually recover? Just remember, it recovers the same way it falls. The real questions are how long to recover, how deep the fall, and when will it finally stop? No one can say for sure because every situation is different. All we can do is take it step by step, keep observing, and see which factors signal that the market has stopped falling and which factors seem to have settled down. Then, little by little, we can start to see some clues from the index and from the prices. But to be a bit more realistic, right now, we still haven't seen those signals yet. We haven't seen those signals so far. In a moment, I'll go over the 3 most important signs that the market has stopped falling. If these key conditions for bottom fishing appear, then you can consider buying at the bottom. That way you're safer. More on that later. Evening, Zeheng. War is unanalyzable. Hi, Hector. Korean and all other stocks are discounted now. Evening, May and Hui Juan. I saw the teacher's weekend report and your online comments. Regarding your comments, my weekend report noted 2 factors. In war, even record margin balances drop. Whether it's 380 or 90 billion, it's high. Just reduce your holdings. We're not whether it was before the war when we told everyone to try to reduce their positions, or now during the war. If you didn't have time to cut your positions, I think that's okay too. At the very least, don't go overboard trying to catch a strong rebound. Wait until there's a clear signal that the drop has stopped, like a candlestick with a long bullish body, or a long lower shadow. More complete signals that the decline is over, or even signs that the conflict between the US and Iran is easing up. If you wait until then to buy the dip, I think you'll have more than enough time, plenty of time. Of course, from a long-term investment perspective, for certain index levels, like the Taiwan stock market, or if you've already bought 0050 or similar ETFs, when prices hit the monthly or quarterly moving averages, you might consider clearing out your positions and then picking up some ETFs. That's fine, but don't go all in and buy everything at once thinking, wow, teacher, it's dropped to the monthly average now. If it drops to the quarterly moving average, can I bet my entire fortune on it? Absolutely do not do that. Never, under any circumstances, whether there's a war or not, should you risk your entire fortune. Because we can never predict, for example, if the US suddenly launches a missile and takes out Iran's leadership in a surprise attack. There's just no way to foresee these things. So when you're dealing with non-economic factors like geopolitical risks, if you accidentally go all in or use high leverage on futures or options, sometimes a sudden drop of 300 or even 3,000 points can happen. You might get a margin call or even get completely wiped out. But in the long run, looking at it over time, this 3,000 point drop might actually be a great buying opportunity. Maybe after a few months, the market could recover all those 3,000 points. But if you went all in with your entire fortune or used a lot of leverage, trading futures or options, if the market drops 3,000 points and rebounds, you might get wiped out, which would be a shame. Let's look at power supply risks. Some say only gold stays steady, unless Trump doesn't run. Trump is unpredictable. His constant mind changing makes it hard to know if he's fleeing or chasing. Speaking of Trump, he said the Iran situation might drag on until September. If it lasts until September, just before the November election, that's a long fight. From March, that's 6 more months of conflict. I don't know if it'll really drag on that long, but honestly, if it does, it won't help his chances in the election, and it won't do any good for the country, the economy, or inflation either. So will he really keep it going for 100 days, or even until September? We have no idea. But if it really does last that long, then when it comes to watching the markets or making strategy decisions, we'll need to be even more cautious. Oh, because he said he wants to clarify something about Iran's leadership. Today, there was talk that Iran's latest leader is changing from Khamenei to his son. What's his son's name? It's Mojtaba Khamenei. Mojtaba is going to take over. And as for the succession, of course Trump said he doesn't accept it. He doesn't accept this transfer of power. He said unless Iran surrenders, there won't be any agreement. Okay, and he also said there's no plan to deploy ground troops in Iran, but they're considering sending special forces to carry out strikes. to destroy Iran's nuclear facilities. Anyway, Trump made a lot of statements, like if this happens, then that, and if people do this or that. He laid out a lot of conditions. As for these conditions, it really just depends on how Iran and the US negotiate, and it'll be a slow process. So in summary, there are two main points. First, the US wants Iran's new leader to be someone more pro-American, someone they can control. Second, they want Iran's nuclear facilities dismantled, which is a major demand. So these are the two main issues. As long as either one of these two things is achieved, just one of them, I think basically the US and Iran can reach an agreement. Let me say it again. As long as either one of these two things is achieved, negotiations between the US and Iran will go smoothly. The first is whether Iran gets a more pro-American leader. It's unlikely this happens unless they wipe out Iran's leadership. Replacing the current leader with a pro-American one is also improbable and would take years to pull off. Conversely, destroying Iran's nuclear facilities is easier and could offer a more achievable path for US-Iran peace talks. But how would that work? To what extent must we destroy them? Must all 450 kilograms of enriched uranium be handed over? Would they really give that up? What conditions would apply? Negotiation is possible if either occurs. As long as either one is achieved, then the tensions between the US and Iran will cool down. If the US-Iran situation cools off, oil prices will drop sharply. And when oil prices drop, inflation won't spike, so the Fed won't have to raise rates, and the stock market will go up. Everything is connected. So right now, the whole market is focused on this. Basically, you don't need to look at anything else. Even companies with great fundamentals are dropping, and those with poor fundamentals are dropping too. Good or bad, they're all falling. Right now, watch if the US and Iran can have successful negotiations. Good talks will lower oil prices, starting a chain reaction. Oil price fluctuations drive the US stock market, impacting positions in international markets. What determines oil prices? It's the state of US-Iran negotiations. Instead of watching price charts, focus on the events driving them. Don't just look at the numbers, pay attention to the underlying US-Iran situation. Anyway, regarding the Iranian president, Trump recently demanded Iran's unconditional surrender, but the president responded directly, "Surrender is impossible. No one would dare negotiate now. They'd risk US assassination. Iran won't send anyone, because if talks fail, internal friction between hardliners and moderates could lead to the negotiators being taken out. If the moderates go to negotiate with the US, there's a real chance they could just disappear. So their internal political situation is pretty unstable right now, really turbulent. Trump just wants to play the stock market. Maybe that's all this is about. Speaking of Iran, the Iranian president said there's no way they'll surrender unconditionally, and also said they won't attack their neighbors anymore. Before, it was Saudi Arabia and the UAE, right? And then what? Jordan and some other countries, the US military's air wings there got hit pretty hard, right? Then he said, okay, in order not to make even more enemies, he won't attack any other neighboring countries unless those countries attack Iran first. Oh, and he also said he would launch missiles at the USS Lincoln and other American aircraft carriers. Both sides are just talking tough. They're shouting threats and bragging about what they'll do. That's pretty much it. The Iranian Revolutionary Guard claims the right to block the Strait of Hormuz during war, prohibiting American, Israeli, and European ships from passing. But what I find more interesting is this part at the end. The Revolutionary Guard said something that really stood out to me. In the middle, they talk about how many missiles they'll launch and how they'll attack, stuff like that. I think both the US and Iran say these kinds of things. The US will say, if anyone comes to power who I don't like, I'll take them out, I'll decapitate them, right? That's just how they talk. Iran says, if you attack me, then we'll go down together. We'll fight to the bitter end, and I'll strike your aircraft carrier. But no matter how much they shout, in the end, I think the highlights are just these two things we just talked about. The Revolutionary Guard said they're ready to give up their nuclear program, ready to give it up, but the precondition is that the US has to offer a satisfactory alternative. In other words, they're not refusing to negotiate. It's not that they don't want to negotiate, but the precondition is that the US needs to come up with a reasonable proposal that they can accept. So now, as the US is saying, what they're doing is basically fighting and making a scene, using conflict to force negotiations, using war to push for talks. As for what stage the negotiations will reach, that will be decided by war. So whether it's the US or Iran, neither side has completely given up on negotiations. No, even though Trump talks tough and says, I'm not going to negotiate with you, not going to talk, let me tell you, if Iran really softened its stance, was willing to negotiate, and, for example, said it was willing to hand over all of its enriched uranium, do you really think Trump wouldn't negotiate? Trump would negotiate. Both sides are talking tough and ready to fight, but options remain. As for timing, nothing has surfaced yet, so they'll keep fighting. This confrontation means they'll likely keep resisting for now. But if you're talking about fighting a scorched earth war that drags on until next September, or even like the war between Ukraine and Russia that has lasted 3 or 4 years, I actually don't think it'll go on that long. No way. Like Michelin said, good night, it won't last that long. Because as someone just mentioned, if you keep fighting, the cost of living will skyrocket, approval ratings will drop, and by the end of this year, in November's congressional elections, honestly, the Republican Party might as well not even bother running. If that's the case, then the president would just become a lame duck. Just think about it. If both the Senate and the House suddenly flip and become entirely Democratic, with a Democratic majority, that means any proposal or bill the Republicans or Trump want to put forward, whether it's tax cuts, tariffs, war, or anything else, none of it would get through. He'd be completely unable to do anything and would become a lame duck president. So in fact, for Trump, I think he definitely understands how serious this is. Is it possible that something could suddenly happen? Right now, both sides are being really tough. One wants to hit the other and vice versa. So with both sides being so hardline, is it possible that one day, all of a sudden, Trump might say, hey, I got my hands on this highly enriched uranium, so I declare victory in this war? It's possible that maybe even tomorrow morning he'll announce the Iranian leadership has decided to hand over all their highly enriched uranium to the United States, so because of this, we've decided not to attack Iran and will withdraw all our troops. Anything's possible. The market could rebound and surge tomorrow. Since unpredictable factors are out of our control, the best move when everyone's panicking is to stay calm. Don't panic sell or dump stocks recklessly. You can trim positions slightly, but avoid going all in or making impulsive trades. Just wait until the dust settles. Like I said, if suddenly Trump comes out and laughs and says, I'm not going to fight anymore starting tomorrow, then the market index could jump 3,000 points the next day. So there's no need for you to panic and sell all your stocks just because everyone is scared. You don't have to do that. What you need to do right now is simply wait. Wait for the market to stop falling, wait for it to stabilize, and wait for the situation between the US and Iran to ease up a bit. Also, remember, just use cash to buy. Don't over-leverage yourself. Don't go overboard with futures trading or take on too much leverage, and definitely don't go all in. So in principle, I think everyone should be able to get through this period of geopolitical black swan risk relatively safely. There's a good chance we'll make it through. For solid companies, there are definitely cases of excessive declines. I'll soon explain the logic with examples. Also, in the Strait of Hormuz, shipping dropped 90% across gas and oil. Check related articles for more. For example, Qatar and the UAE have reduced their natural gas output by 20%, and there are many other similar situations. Crude oil production has also been cut by 3 million barrels, among other things. Even the G7, the group of 7 major industrial nations, their finance ministers are discussing this. They're considering whether to jointly release what they call their oil reserves, maybe releasing 300 to 400 million barrels. That's a huge amount, and the idea is to keep oil prices from spiking too high. To put it simply, the current surge in oil and natural gas prices is something neither the US nor Europe can handle. For example, Europe really depends on natural gas, right? A lot of Europe's natural gas might come from the Arab countries I just mentioned, like Qatar and the UAE. If you look at natural gas prices, they've absolutely skyrocketed, and crude oil prices have jumped 35% in just 1 week. Actually, no country can withstand this. In the short term, maybe they can handle it. Maybe they have some oil reserves. They might be able to get through 3 or 4 weeks, or even a bit longer, maybe 2 months. But if it goes on any longer, if it lasts more than 2 months, then if prices keep surging like this with oil and natural gas staying so high, I'm telling you, Europe will be the first to say, we're done. We're not fighting anymore. Europe will be the first to put pressure on the US, and even in the US itself, the prices of everyday goods will skyrocket. Nobody will be able to take it. So about this situation, I think there's no way all the countries can reach a consensus. Now, since that's the case, it all comes down to how the US and Iran are going to negotiate, how they look at things, how they talk things out. Now, if you want to buy the dip, how do you do it? It's actually pretty simple. There are basically three conditions you need to meet. JP Morgan has mentioned this before. They said that if you want to buy the dip right now, you need to meet at least one of these three conditions. It's not that you have to meet all three, just one is enough. The first one is the stock price has fallen below extremely low valuations. What defines an extreme stock price drop? Whether it's a monthly, quarterly, or annual moving average deviation, extreme negative deviations often signal a sharp oversold rebound. Beyond that, consider what defines an undervalued stock. Let me give you a simple example to illustrate this. Let's look at it using the Bloomberg system. According to Bloomberg's estimates, let's take TSMC as an example. TSMC is a great company, right? It's known as the guardian of the nation, really outstanding. In fact, nearly 45% of the entire Taiwan stock market's weighted index relies on TSMC alone, so when TSMC moves, it affects the whole market. So how should we look at this? It's actually pretty simple. Bloomberg's estimated EPS for this year, let's just use round numbers. Some people estimated at $88, some a bit higher, up to $100. Let's just use $100 EPS for simplicity. If TSMC can reach an EPS of $100 this year, and you multiply that by a price-to-earnings ratio of 20, that gives you the fundamental value. A PE of 20 means 100 times 20 equals 2,000. That's the fair value. If TSMC hits 2,000, it's fairly priced. So what's undervalued or oversold? Generally speaking, you shouldn't just stick with 20 times. It's more reasonable to use 15 times as a fair estimate, a PE ratio of 15. So if you take the estimated EPS of $100, this is a repeated estimate, $100 EPS, and multiply it by the lower benchmark of 15 times PE, then the price comes out to about 1,500. In New Taiwan dollars. So in other words, if TSMC's stock price drops below 1,500, based on this year's estimated EPS and profit level, if it falls below 1,500, what does that mean? It means that in the short term, it might be oversold, and if it drops below a reasonable price, it means the market is undervaluing it. That's a buying opportunity. What's overvalued? Use 15 as a benchmark. 20 is fair, and 25 is overvalued. Above that is excessive and overbought. If EPS is $100 times 25, you get 2,500. So if TSMC is 2,500 this year, that means it's already reached a plateau, relatively speaking. So just remember, for every stock, if you multiply its EPS by maybe 12, 15 times, just do a quick calculation. You can estimate whether the stock you're holding right now is actually oversold or not. Is the price reasonable? If it's plateauing, wait for a drop. Remember what Zhao Meng said, at extreme valuations, if it's not there yet, just wait. People often ask, teacher, can TSMC reach 1,500? What if it never drops? Let me tell you. Everything can drop in price. The issue is people lack patience. TSMC fell below 400 recently, but many missed it because they wouldn't wait. It's not that the chance won't come, people just aren't willing to wait for it. It's just that for your estimated price, every year you look at the projected EPS and then the PE ratio. It's really simple. You just need to know the estimated EPS for each year, which you can find in many institutional reports. These are all free public information. Once you have the estimated EPS, just multiply it by 12, 15, or 20, and you'll get an idea of what the long-term investment price might be. Using this year's, last year's, or even next year's numbers, you can estimate what a reasonable price would be. Whether it's undervalued or overvalued is really easy to figure out, super easy and straightforward. This method is incredibly effective, really simple. But for most people, I think it's not that they can't do the math or don't know how to look at it, it's that they don't have the patience to wait. Yeah, not having the patience to wait is the biggest problem. Impatience is the main issue. As for seeing it at 1,500, I'm not sure it'll ever get there. But I do know if it hits a PE of 15, it's seriously oversold and a clear buying opportunity. This is basically the way to look for buy and sell points for different stocks. The second point is, he mentioned that when there's news of a conflict that's clearly cooling down, like I just talked about the US-Iran situation, if there's enough time for the situation to ease and for the market to expect things to calm down, all of that is information you want to pay attention to when trying to buy the dip. So just remember what JP Morgan said. As long as any one of those three conditions is met, that's enough. All right, newbies and retail investors, good night. William recalls $1,500 equals about 28,000 points. If we use TSMC to estimate the index, that's one approach. Assuming only TSMC counts, you can estimate the index when it hits 1,500, 2,000, or even 3,000. With analyst targets at $3,000 for TSMC, you can calculate exactly where the index might land. Anyway, just do a simple calculation and at least you'll have a directional value to estimate roughly where the price might be. Now, as for crude oil prices, today they also surged by 13.08, which is really scary. During trading, it even spiked to 120, and of course, the current price is 102. So when will this price surge end? Of course, it depends on the situation between the US and Iran. If tensions between the US and Iran cool down, then prices will likely drop, and the stock market will have a better chance to rise. So what about the economic data? Note, no major economic data is expected today or tomorrow, but what about Wednesday? You can keep an eye on the US year-over-year CPI. Also, the three major oil reports, EIA, OPEC, and IEA, will be released on Wednesday and Thursday. So when watching these, pay close attention to how these three major oil reports affect global oil supply and demand, including the situation with the US and Iran. With tensions rising in the Middle East, it's important to consider whether there are different perspectives on oil demand and supply. So with the three major oil reports coming out this week, you really need to pay extra attention to them. Now on Thursday, besides the oil reports, there will also be travel numbers and the US January trade balance. Then on Friday, March 13th, there will be US data like fourth quarter GDP, durable goods orders month over month, and PCE. This is really important. PCE includes core PCE, personal consumption expenditures, and so on, which are closely related to inflation. So overall, I think the most important data this week will come out on Wednesday, Thursday, and Friday. Of course, in the evening show, we'll also track these together. As for earnings reports, if there's time later, I'll give you an update on Marvell's earnings. And as for Oracle, you can check out HP's conference tomorrow. So for Oracle on March 11th, we really need to pay special attention to their earnings report. After that, on the 18th, there's Lululemon and Micron. New earnings reports will keep coming out one after another. But overall, I think before mid-March, we should mainly keep an eye on these, especially Thursday, which should be March 11th. We should pay attention to Oracle's earnings report around Wednesday or Thursday, since it'll have a bigger impact on the AI sector. Speaking of Oracle, let me mention a bit more about it. Oracle, this so-called perpetual motion machine, has dropped the ball this time. This issue could be big or small. Although the news coming out now says that Oracle was originally in talks with OpenAI about expanding their data center in Texas, planning to increase capacity from 1.2 gigawatts to 2 gigawatts, rumor has it that due to financing issues and OpenAI's constantly changing demands, the project has been delayed for a long time and they haven't been able to finalize anything. The longer it drags on without a finalized plan, the more likely it is to fall through. If this investment and partnership deal can't move forward, who wouldn't be worried? If this can't move forward and investors aren't able to expand, then the AI boom will be missing a piece. And who would be worried about that? NVIDIA would be, because only by continuously expanding data centers and increasing capital expenditures, buying lots of chips, can things keep growing. That's how NVIDIA's valuation, NVIDIA's EPS, and NVIDIA's gross margin can reach over 75% and even keep increasing significantly. So in this perpetual motion machine, if any company drops the ball, NVIDIA will usually step in to do something, either to support them or to allocate resources. And sure enough, NVIDIA did something about it. They said, even if it's Oracle, let's say this partnership, if the collaboration with OpenAI or the Texas plant expansion partnership really runs into problems, NVIDIA steps in to help Meta. They want to help Meta work with this developer, to close a deal with the developer, to lease land for the Texas plant expansion. So Meta becomes a tenant of that land. So what's the benefit? The benefit is that NVIDIA's calculation is, even if Oracle doesn't lease the land or doesn't expand, at least Meta still needs it. Meta will still use it. As long as there's expansion, they'll need NVIDIA's chips. Why is NVIDIA stepping in now? They're worried that with this AI perpetual motion machine, if one company falls behind, NVIDIA can find someone else to fill the gap. Okay, so is Oracle weak right now? Yes, it's still very weak. It's basically in a state where it's already dropping the ball or halfway there, just really weak. So in its current weak state, honestly, whether or not a US-Iran war breaks out, it's just going to keep falling all the way to the bottom. It's been dropping from $350 since last September, fallen for half a year, and it's still going down. Okay, so you might ask, when will this decline turn around? Basically, it's when its cash flow, specifically its free cash flow, FCFC, starts to recover from negative, gradually climbing back up, or even converging to become positive. Then Oracle will finally have potential and be worth watching. Right now, the market has many doubts, especially with rumors circulating that neither Oracle nor OpenAI has confirmed or denied. So anyway, there's always a reason behind things. Just keep an eye on it. If it turns out to be true, it would actually be a negative for Oracle's stock price, so you need to pay attention to this potential downside. Last Friday, it also dropped $1.18, and overall, it's still showing weakness. Now let's talk about those financial cockroaches we really can't ignore. With the first quarter almost over, the market trend is basically set and should still close in the green. Whether it's the Taiwan stock market or the US market, they both look positive and remain mainly bullish. But moving into the second quarter, there are two specific things everyone should watch out for. I actually mentioned these two things in my last weekend report as well. Two things. The first thing that will impact the second quarter is what we're going to talk about in a bit, the issue of financial loan sharks or credit loan sharks. This could be a variable. The second thing is whether the US-Iran war will go from just a short-term conflict, like fighting for a week or two, to suddenly, by accident, dragging out to 100 days, 3 months, or even half a year. That would not be good. If the fighting drags on too long, it's not good. If it's just a small skirmish, it's kind of like... Let's put it simply. If you have a fight with your wife, or you argue with your boyfriend or girlfriend, and you have a little Cold War or a minor quarrel, it's usually easy to make up, right? Maybe you argue today over some trivial, petty thing, and you get into a fight. After the argument, neither of you wants to talk or call each other. But after 2 or 3 days, you suddenly think, forget it, let's not fight over something so trivial. So you try to make up and say, hey, honey, let me take you out for a nice meal. Wang platform just launched some new deals. Or whatever. Let me take you out for this Valentine's Day set menu. Come on, let's stop fighting. So will your partner still be cold and unresponsive to you? Usually not. Usually after 3 or 4 days, because on the day of the argument, everyone is exhausted and it's tough for both sides. But after 3 or 4 days, once the anger has faded, if one person suddenly lowers their guard and says, all right, I'm sorry, it was my fault, let's not fight anymore, then even if the argument was short, it doesn't really matter. After a short while, you can sit down together for a meal and talk things out, and you'll make up again. What you really have to worry about is those couples who have been married for a long time. But if a fight drags on for months of silence, things get tricky. Imagine coming home and she won't cook. All you can do is grab noodles nearby because she hasn't made a meal in months. It's hard. So this kind of thing is just like the situation between the US and Iran. If it's just a minor spat, maybe after a little argument, there's still a chance to make up. Maybe after a week or two, you can see if there's an opportunity. It's not impossible for things to suddenly calm down. But if the fight drags on and turns into a Cold War for 3 months, 6 months, like what's happening between Ukraine and Russia, then honestly, the chances of making up become much slimmer. Yeah, it gets a lot harder. In the end, you might just say, wow, I can't take it anymore. You haven't talked to me for half a year. For 6 months, you've just made me eat plain noodles and won't cook for me. I've put up with this for half a year. I can't stand it anymore. I want a divorce. Regarding the US and Iran, remember 2 things. First, a prolonged conflict hurts the stock market. If that happens, you just have to wait for the market to bottom out, because there are just too many areas that would be affected. Prices, inflation, the economy, supply chain disruptions, and a whole bunch of other things. If it drags on, all these issues will pile up at once, and that's really scary. It could get really bad. But if it's just a short-term thing, then it's not a problem. Next, let's talk about the credit crisis. This is something everyone needs to pay attention to. BlackRock's stock price took a big hit last week. How much did it drop? It fell by 7%. Why did it drop 7%? Because one of their private credit funds faced some trouble. This fund specializes in private lending, and it's pretty sizable, with $26 billion under management. That's not small, it's actually quite large. But in the first quarter, it faced a massive wave of client redemptions. Up to 9.3% of investors wanted to cash out. Alright, so if only 5% wanted to redeem in the short term, the company could still manage to cover it. But if 9.3% want to redeem in a short period, then what happens? BlackRock said that because too many people wanted to redeem in the short term, they restricted investors from withdrawing and redeeming. This sparked some concerns in the market, with people asking, hey, why are so many people trying to redeem? And now you're also restricting investors from making withdrawals? This has led to increased worries about risks in the credit market. So why did so many people, 9.3%, suddenly want to redeem? It's because last week, including Blackstone, which is Blackstone Group, their flagship private credit fund have the same issue. It's also a credit fund. There was a redemption wave of about 7.9% at Blackstone, and this time at BlackRock, it's 9.3%. Now, why are both Blackstone and BlackRock facing these redemptions? It's because a few weeks ago, the UK's NFS went bankrupt. This credit institution went under. Although the funding gap caused by its bankruptcy was honestly only a little over 990 million pounds, which is about 1.25 billion US dollars, it's really not that much. Not a big deal, honestly. Altogether, what does it look like? Well, if you look at companies like Barclays and others that have lent money to them, even when you add it all up, it's only about 2 billion. It's just about 2.1, whether that's 2.1 billion pounds or dollars. Honestly, it's not much at all. It's really small. Compared to the trillions of dollars circulating in the entire global market, this 2 billion is really, really tiny. But precisely because it's so small, people start to wonder, hey, could there be more to come? Like when you see one cockroach, maybe there's a whole bunch hiding that haven't come out yet. Most investors in the market, or even people like Farley, are worried that it could turn into something like the subprime mortgage crisis in 2008. Where what started as a small issue ended up causing a huge wave of problems. Then it keeps getting bigger and bigger, eventually turning into a huge hole. That's what everyone's afraid of. On top of that, there's the war between the US and Iran, and if this so-called perpetual motion machine of AI, the constant flow of capital, keeps requiring massive capital expenditures with billions upon billions of dollars, like $650 billion or $700 billion being burned continuously, but then some lending institutions run into liquidity problems and go bankrupt during this process, people start to worry. It all starts from a small crack. A small crack turns into a big hole, and then the entire AI supply chain starts having problems. That's what people are really afraid of. That's also why there's been such a sudden surge in redemptions over the past week or two, jumping to nearly 8% to 10%. This is the reason. So everyone really needs to pay attention to Jamie Dimon's cockroach theory. These kinds of issues might slowly start to emerge as variables in the whole market. Some things might get overlooked, or people might not notice them, but you have to be careful, because this issue could turn out to be big or small. Take BlackRock, for example. It dropped 7.69% last week, and right now it's still showing a downward trend, breaking through support lines. So don't rush in to buy the dip just yet. I think this credit crisis could be a pretty uncertain potential factor in the second quarter, so keep an eye on it. After all, the first quarter, the index hit new highs again, and everyone made a killing. People made a lot of money, and so did institutional investors. But if anything stirs up trouble in the second quarter, there could be a stampede with everyone rushing to sell their stocks. Why? Because over the past 3 years, everyone's made a lot of money. Lately, people have made plenty of money. Selling now just means more or less profit. No loss unless you bought recently. If you're a long-term institutional investor, then this dip, it's still fine. Even if you're down 7%, maybe you made 700% before, so a 7% drop doesn't really matter. But you do need to be careful in the second quarter of this year. Pay a bit more attention in quarter 2 this year. Okay, so someone named Meow asked, what if both sides can't let go of their pride? Yeah, what if neither side can let it go? If they can't, then it just turns into a cold war, right? Think about it. If you and your girlfriend, wife, or whoever get into a fight and both of you can't swallow your pride, the Cold War continues, and you'll be eating out daily since she won't cook. Pride doesn't help. It's about how both sides communicate, so pay attention. Regarding Chives and Shelby's question, watch out for financial cockroaches. Last week, NFS, BlackRock, and Blackstone's private equity funds saw redemptions, which is concerning. Also, Marvel and Broadcom's earnings both beat expectations. Their S-chips, including data center network products, are all selling really well. Everything's great. So fundamentally, their earnings are solid and growth is accelerating, so everyone can rest assured about that. As for the AI industry, there's no bubble at the moment. Before 2027, I think from this year through 2026 to 2027, at least until the end of that period, overall, there shouldn't be any major issues. If we narrow it down even further, I'd say that up until mid to late 2027, I still don't see any signs of the AI wave overheating. There's nothing like that right now. It's just that there will be more and more noise and rumors out there. But since Marvell and Broadcom's earnings reports are solid, there's really no need for everyone to worry too much. Some stocks saw a strong 18% jump last Friday. It's holding above the 200-day moving average. Staying above that is key. Looking at US pre-market trading, a company called Li Shanggo Yi, or Go Yan Yi, is up 5.54%. This surge follows a $200 million settlement with the Department of Justice over a lawsuit. Military and energy stocks gain pre-market, like Apache, Rattlesnake Energy, ConocoPhillips, Mosaic, Occidental Petroleum, Phillips 66, and Raytheon Technologies. A lot of defense and oil companies are up about 1 to 3% in pre-market trading, but aside from that, tech stocks are still under a lot of pressure. Most tech stocks are down about 1 to 2% in US index pre-market trading. So which companies are dropping? Another group being affected, actually negatively impacted by the war and unrest, are those in the airline and travel sectors. For example, Carnival dropped 3.76% in pre-market trading, and Delta Airlines also fell 3.7%. United Airlines and Southwest Airlines are both down more than 3% pre-market as well. So today, the companies with the biggest declines are mainly in these sectors. The companies going up are in the defense and energy sectors, while those in between, like tech stocks, are generally down about 1 to 2%. So looking at the US stock market today, there's still quite a bit of pressure on the indexes. Everyone should be a bit cautious. Really, you still need to be careful. Is it Renke or Renshi? Or is it Share? I saw you guys win, but I don't know how to pronounce it. He said, remember, in Shia Islam, the Ayatollah is the highest symbol of God on earth. Right, I think it's called Ayatollah. I forget exactly, but that's their supreme leader, the highest religious figure. Previously, Khamenei, who was beheaded, held that position. Hami, you know, that Ham, it's just like Khamenei. Khamenei is the one who holds this position, which is basically the highest rank among their clergy, the top level in Islamic religious leadership. Some of them can teach or even make laws. He's basically the lowest level leader who sets up this system. Yeah, when it comes to religious fanaticism, it's really hard to reconcile, really hard to resolve. But, you know, with these Middle Eastern issues with Iran, this time when the US is going after Iran, it's actually not really about religion. The main issue is really about nuclear energy and nuclear weapons, so it's relatively straightforward. It's not like the top 3 levels of generals. If religion gets involved, it would be more like the whole greater Middle East region, like Israel, Hamas, Lebanon, Jordan, then Syria, and even other Middle Eastern countries. For the past 2,000 years or even longer, it's been, you know, since the time of Abraham, Isaac, Jacob, and Jesus, and it's continued all the way down, maybe the 12 tribes and so on. So what? The division of the great nation of Israel and all of that gets really complicated. That's where you have all these religious sects, cultures, and humanities tangled together in this huge 2,000-year-old mystery. It's all intertwined. You could say it's impossible to completely separate or make sense of it. But when it comes to the issue between the US and Iran, religion actually isn't much of a factor, so it's not as complicated. If we're just talking about whether or not to negotiate, it really doesn't involve religion. Negotiations are about giving up your nuclear weapons, so this situation is different. The Dow Guang Index dropped since last week, below monthly and quarterly averages, down 0.95%. So what about going forward? Right now, the monthly and quarterly moving averages are taking a break, but they haven't turned bearish. So everyone, don't be overly pessimistic. The current index hasn't shifted from a 3-year long-term bull market to suddenly heading into a 5-year bear market. There's no need to be that pessimistic, okay? Don't be like a startled bird. Just because we've had a week of pullback doesn't mean we're heading into a long-term bear market. It's not going to be that bad. Right now, in the short term, it's more like a reasonable correction after a strong rally, which is pretty normal. Taiwan's market is also just pulling back after hitting a new high. If it hits key moving averages and finds a buying point, that's fine. The structure isn't bearish, just a correction. For the Dow, watch if it tests support at the annual moving average. If it reaches that level, keep an eye on the 200-day moving average too. As for the Philadelphia Semiconductor Index, you need to be careful and keep an eye on it. Like I mentioned earlier, there are concerns about a credit crisis and the AI perpetual motion machine, which might raise some doubts. Plus, looking at the SOX index in terms of its key levels, it has fallen below the quarterly moving average, and it also broke down from the rising wedge pattern we talked about before. It actually broke below that last Thursday as well, so this is something to watch closely. If it really breaks down, if in the next 2 to 3 days it can't strongly climb back above this blue trend line or even get back above the 50-day moving average, then the pressure on the semiconductor index and tech stocks will be relatively high. Consolidation will lengthen, increasing pressure on Taiwan stocks. Since 60 to 70% follow the non-semiconductor index, watch this closely. Last Friday, that index dropped nearly 4%. Short-term trends remain broken below support. As for the regional investment index, it dropped another 1.82%. Fortunately for the regional investment index, the 50-day and 20-day moving averages are both trending downward, but the 200-day moving average is still sloping upward. Also, looking at the trend line, the blue line here still shows some support. So over the next few days, keep an eye on whether the regional investment index can continue to hold its ground. If it does, and after the index finishes consolidating and starts to move up again, these regional investment stocks will still serve as an important indicator for boosting market confidence. Short term, watch the Philadelphia Semiconductor Index, which is relatively weak. For the Dow, see if it pulls back to the 200-day MA. If that level holds, there's little to worry about. Simply put, indexes are likely to pull back after this strong rally. This doesn't mean we've turned into long-term bears, but everyone really needs to pay extra attention to risk control in your positions. As for whether you should try to catch the bottom or jump in to buy the dip, remember the 3 conditions for a reversal that JP Morgan mentioned earlier. If any one of those conditions is met, then you can slowly start looking for buying opportunities. I think that's a safer approach. Alright, that's all for the cycle-related content. Before the market opens each day, we provide you with the latest updates here on Daily 5. When class is over, don't forget to like, subscribe, and share. Wishing everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.